Hey, this is Sasha, and welcome to another episode on Let's Talk Stocks. Today we're going to talk about the 37 dumbest reasons why people get into a stock. Just kidding. I'm going to talk about 5. So many people get into stocks for a lot of different reasons. I wouldn't say it's stupid of them, but it's not always the smartest financial decision when you're getting into stocks for these reasons. So here are the reasons. We're going to check them out right now, and I'll let you know my thoughts and opinions on maybe the appropriate way to thinking about things. So let's get started here. Reason number 1 is they're not invested. So if you're not invested, it comes along with the fear of missing out. If you're missing out, you feel like you're missing something. Hey, my friends got that phone, the smartphone. I got the dumb phone. I want to get that phone. So the same thing here happens. The news talks about the percentages that this stock's going up, that stock's going up. If you're not invested, if you're not in it, if you're missing out, you want to get in it. And then you buy the stock and you get into the wrong stock and it starts to go against you. So that's one of the first reasons is that you're not invested, so you get into the stock because you're just not invested. Okay, the second one is you got a tip. So if you got a tip from a friend, a buddy, or TV, then you go ahead and you get into the stock. Again, not a good and smart idea because their risk profile is probably different than yours. Their risk tolerance is probably different than yours. Their amount of money is probably different than yours. They're probably at a different age and time. So all these factors play a role in how you should be investing in diversifying and, making sure that you protect your nest egg. So if you got a tip from somebody to go ahead and trade that stock, stay away. Normally, anytime somebody gives me a tip or tells me to look at something, I already make sure I don't trade that thing unless already I know the stock very well in depth and I already am trading it fairly actively. But otherwise, if you got a tip from somebody, just kind of brush it on, say thank you, move on, and go to the next thing. All right, so next one is for the love. So if you love a certain product, if you love a phone, if you love a certain car, if you love whatever the case is, man, if you really just love something about the company, if that's the case, that's really a problem because you get too emotional into it. You're too involved. Just like they say, love is blind. The same thing in the market is that, hey, you like a certain product, a company too much to see it clearly. So you get it because you like it, but it's not necessarily because the business is doing well or the business is growing. And people buy stocks and they profit from stocks because they grow and they profit. But if you're getting it for the love and if it's not profitable, well, you're not going to make a good return on your investment. And the whole point is to get a return on your investment. So that's another bad reason to get into a stock. Okay, here's the next one, and that is for the quick money. Everybody wants fast money. I want money yesterday. I want money microwave style, right? You put $5 in your microwave, you get back 50. That's what we want. If you want to make money fast, the stock market is not really the place. It's just like any other job. It takes time, it takes energy, it takes a lot of learning behind it. In our society these days, we constantly flip the channels in our radio to find the next thing. There's mental stimulation, right? Nobody has the energy to watch a 2-hour YouTube video like I used to make in the past, an hour long. It's very tough. Nowadays, people want 5-minute videos. They want them quick. A lot of people don't want to read a 300-page book. They want a 10-page report. So everything has become a lot quicker. Microwave society. You don't want to do a smoking barbecue session anymore. You want the microwave. And that becomes a problem because the stock market, sometimes you can make some quick money. I will say that. But a lot of times it's a lot of hard work and it still takes time. Unless, of course, your risk tolerance is extreme, but then you'll have a lot of whipsaw in your profitability and losses. So, if you get into it and you get into a stock because you want fast money, you want quick money, the quick buck, it may work for a little bit, but eventually it'll come back to bite you. So be careful. And then the next and final one that I have is it's cheap. Hey, a stock that used to be $100 is now $5. It's cheap. So get into it. It's a good value. That's, again, not always the smartest approach. Think about this when you go in and you buy anything at the store, right? You buy a computer, you buy a laptop, you buy a phone. If it's a $10 phone, that's probably cheap for a reason. If it's a $10 computer, it's probably cheap for a reason, right? If you were to buy my laptop and I sold it to you for 50 bucks, it's probably got a cracked screen, it's probably not working right, it's probably not even starting, and the battery might be missing. But if you spend maybe $700, all of a sudden you might get some better value out of it because, it's got some value attached to it. It's working, it's functioning, it's fast. So people buy stocks because they're cheap, and when they do that, well, remember, it's cheap for a reason. So don't buy a stock just because it's got a low dollar for the share price on it. Because the big boys, they already know. Instead, look for what's the value behind it, what's the potential growth in front. So a lot of times, stocks that are cheap, penny stocks, or stocks that are down in the gutter, they're going to be in the gutter for years and years upon years. Can they break out of that? Absolutely, they can break out of that, but it takes a lot of time. It takes energy, it takes a lot of money. The company, just because they're bigger companies, take time to turn and roll over, just like the Titanic. They take time to rotate and get to the next stage. And sometimes that takes years. Doesn't mean they can't do it. It just takes a while. So don't get it just because it's cheap, because they're usually cheap for a reason. All right, so thank you so much for joining me in this week's video and episode. Hope you found these things helpful. I hope you're not buying stocks because of these reasons. But if you are, be very, very careful. All right, keep your eyes peeled. We have the book that I'm working on, still working on, Mindsets of a Master Trader, coming up soon. I'd say in another couple of weeks, simply because, well, the summer is here and I'm enjoying myself. So you enjoy yourself as well. Do what you love, contribute to other people, but most importantly, live life abundantly. And I'll see you next time.